And what we find is only a net 2% of respondents are now saying they're going to cut back on spending on an investment property. Now, that's a fairly big change from the minus 8 or 9% of the previous month. Well, hello again, everybody. There's a couple of things I'd like to talk about this week. One relates to what the banks are doing currently with fixed mortgage rates, and the other one is regarding the question of what are investors doing, or people more generally, following the March 23 announcements from the government regarding the tax policies for investment property. Now, obviously, when I look through the likes of my survey of real estate agents, mortgage advisors, etc., I can see that investors and a few first home buyers have been pulling back from the market, waiting to see what is going to happen. Now, there's one particular monthly survey I do called the Spending Plans Survey. I normally get about 1,300 people responding to that. I ask a whole variety of questions such as, are you going to spend more or less generally in the next 3 to 6 months, and what will you spend more or less on? And one of the questions or options there is an investment property or a home to live in. The answers for buying a home to live in, they usually don't change by all that much. But when it comes to buying an investment property, we saw very early this year, late last year, a net 11 to 13% of people responding saying, I'm going to spend more on an investment property, ahead of the March 23 announcement. That had pulled back a bit to still positive 5%, but then afterwards it was a minus 10%, and then a month later it was minus 9%, and now we get to the latest results from my survey of last week, releasing them, the results this week, and what we find is only a net 2% of respondents are now saying they're going to cut back on spending on an investment property. Now, that's a fairly big change from the minus 8 or 9% of the previous month, and it says that maybe we're starting to reach the end of that wait and see period for a lot of investors. I think people are seeing some evidence of the rents that are going up there and shortages of rental properties. Lots of discussion about that out there. People are thinking about the alternatives. Sure, quite attractive, other investments out there, but looking at the history of house prices rising over time, looking at the deposit rates still remaining very, very low, and I can't help but thinking that with some of the portfolio rationalisation that's going on, some people are selling off their older stock, just getting the debt down a bit, that we're going to maybe reach a new equilibrium fairly soon, where if prices were going to fall, they'll sort of done it within the next few months, and maybe we'll start to see a few new buyers coming along. And I guess this is why I've been emphasising so much along for the past 2.5 months for first home buyers. For the moment, you have less competition at the auctions, open homes, but don't go thinking it's going to be there for the rest of this year, or for the rest of your lifetime. Second thing I just wanted to note is that we are seeing another round of increases in bank fixed mortgage rates from the 3, 4 out to 5 year periods, at the same time as some extra discounting of the 1 year fixed interest rate. Now, most people have been just fixing their rate for 1 year, so you're probably thinking, oh, this is great, the interest rates are going down. Just be careful, as Admiral Akbar would say, it's a trap. The banks are basically not wanting a whole lot of people to sign up for the 3 to 5 year fixed rate mortgages at the moment, because the margins are well below average there. And if they get people signing up, they're locking in the low margins for a long period of time. If you are incentivized to take the 1 year fixed, just be aware of the risk that once the rates start rising, the low long-term fixed interest rates, they'll already be well and truly gone. So if you're going to fix 1 year fixed at the moment, you should be thinking, I'm going to do this again in 12 months, again 24 months, bang, 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 all the way through the cycle. But if I'm still doing these weekly videos in 3 or so years' time, I'll be reminding you about what I was saying back here now, and what people tend to do when the short-term rates are high and the long-term rates are a bit lower. That's when maybe you go and lock in a long-term fixed interest rate you wouldn't touch with a barge pole at the moment. But that's not the case now. Just maybe have a look at spreading some of your interest rate risk out there a bit. All the best.